The following is an interview with Michael Saylor, founder and CEO of MicroStrategy. Saylor has become legendary in cryptocurrency circles as his company, MicroStrategy, has converted its entire balance sheet into Bitcoin. Saylor and MicroStrategy now hold over 100,000 Bitcoin. Today, we talk about Bitcoin, Ethereum, hyperinflation, and even UFOs. There is no sponsor for today's video, however, if you could like and subscribe to the channel, it would help out immensely. Enjoy the video. To put this into perspective, MicroStrategy now holds 1 out of every 210 Bitcoin that will ever come into existence. First of all, congratulations, Michael. That is a huge achievement. And second of all, how are you doing today?
I'm awesome. Thanks for having me.
Awesome. Thank you so much for joining me on the channel. It's an honor to have you. Now, before we jump into Bitcoin and the cryptocurrency side of things, which of course we're going to, my first question to you is, did you see any of this coming? Over the last 12 months, you have been catapulted into a newfound fame. You recently crossed over 1 million Twitter followers, and you now have the position as an unofficial spokesperson for Bitcoin. Not only do you run a multi-billion-dollar company in MicroStrategy, but you are now also educating millions around the world on Bitcoin. So how do you go about balancing it all out? How do you keep up so much energy to always be so well prepared in interviews? And overall, how have the last 12 months been for you?
Well, I think it all evolved organically. The most beautiful things in life, I think, are organic. So no, I didn't see it all coming. Bitcoin drafted me. And after March of 2020, I felt that I needed to find a solution to my company's problems. When I discovered Bitcoin, I said, this is digital gold on a big tech network. And so not only was it a solution to the corporate treasury problem that every company has, but it's a solution to every individual family or institutional treasury issue. And the fact that it was a big tech network, an open monetary protocol, meant that it was the next cool chapter of the mobile wave. So I mean, I had a lot of passion for digital books and digital education and digital maps. And when I saw digital property, I thought this is the next big thing. So then we just got drawn into it, right? And first we did a $250 million purchase. Then we did a Dutch auction, and our shareholders left us with $175 million more dollars. So I didn't know I'd have the $175 million after the first $250 million. I didn't know that until 20 days after the Dutch auction was announced. So after we had that, we did the second purchase. Then the stock traded up. We ended up with a lot more money. The business was doing great. So we did a third purchase. Then we went to the bond market and we offered 400 million in convertible bonds. And the company stock was trading at the high for 10 years, $300. And we did the bond offering, and then it was upsized because there was a lot of demand. So then we did a $650 million purchase. And then Bitcoin marched up. I think we did that at 20,000, and Bitcoin went up and our stock went up, and then pretty soon we were trading at like eight times what we had been at 4 months ago. So we were able to do another financing, and we did $1 billion purchase. So then after that, we were able to do a $500 million debt offering at 6.125% interest. When the dust settled, we had raised $2.2 billion in debt. And through the Dutch auction process, we had another 400 million in equity plus another 100 million. So we found a way. We found like 2.8 or 2.9 billion dollars we didn't know we would have, and the debt was borrowed about 1.5% interest rate. So if I had put out a press release in June saying I want to borrow $2.2 billion for 1% interest to buy Bitcoin, that wouldn't have happened, right?
Right.
If I had gone to the board and said, that's what I want to do, they would have said, you're crazy. That's not going to happen. So we kind of worked our way into this because of a fortunate set of events, a lot of macroeconomic tailwinds blowing in our favor. And then every time we had an opportunity, we seized the opportunity, so fortune favors the bold, right?
It does. And you did mention the macro side of things that I do want to get into. In recent interviews that you have done, it's been brought up that monetary inflation in the Western world has averaged out to around 7% per year. Obviously, in countries like Venezuela and Argentina, much higher. As I understand it, your macro outlook heavily played a part in your original decision to purchase Bitcoin 12 months ago. I wanted to get what your updated macro outlook is over the next 5 to 10 years. What is sort of your expectation of inflation numbers that we'll see? And do you think the US is sort of headed towards hyperinflation?
I think from 2010 to 2020, it was clocking about 7% in the US dollar, and all of the currencies that kind of pegged to the dollar, about 7% monetary inflation a year. I think it tripled from March 2020 to March 2021, at least. There's debate. We could debate whether it's 20% or 30%, but I mean, the S&P 500 was up 38% year over year from where we're sitting today, but I suppose it tripled. And now if I look out, I can't see any reasonable forecast where it isn't at least double. It isn't 15%. So my forecast is maybe it's not as extremely expansionary as it was from March until today. Not over the last 15 months have been pretty aggressive, but I think it'll continue much more than 7%. So if I had to make a forecast, I would say 15% for the next 4 years.
Right.
And then maybe it'll taper.
So about double. I would love to get your response to, I've seen Fed officials sort of in the last few months have called the high inflation numbers that we've seen over the last few months. They've called it transitory, or they're inferring that it will be in any way short-lived. What's sort of your response to that? And do you think it's irresponsible to be making comments like that? Or how do you respond to those, that sort of notion?
I think inflation is a vector, and so it's not one number. It's not a scalar, and you can't use arithmetic. If you want to be simplistic, you say inflation is CPI or PCE, and it's one number, and we were targeting 2%, and now it's 4 or 5. But that's not the way I think it is. I think it's an n-dimensional vector. So, for example, I think the inflation rate in single-family homes in the U.S. is 25%. I think inflation rate in equity was 38%. The S&P 500 index is up 38%. The cost of buying a share of stock in a company is 38% higher. So if you look at asset inflation, Bitcoin's up 270%, NASDAQ is up 40 something percent. There's no inflation in gold, that's flat. Real estate's up 20% or more. You know, you can find a market basket of things called CPI that are only up 5%, and you can say that's transitory. It's irrelevant whether it's transitory or not. If I keep track of a list of things that you don't want to buy, and I tell you that the price hasn't gone up, what does it matter whether the price went up or not? The question is, what do you want to buy, and what prices are going up? And I think the price is going up at a different rate every month in every different place in the world and every different cohort for 1,000 different products, services, and assets. And, you know, that if you understand that, then the best surrogate for an investor is the monetary inflation rate. And the monetary inflation rate is somewhere between the M2 money supply expansion and the S&P index. Take the S&P index, 38%, it's up, and then subtract 3% risk premium. And you could say there's a 35% risk-free hurdle rate. That was the rate at which the currency devalued, right? The dollar weakened by enough to drive the stock indexes up by 38% this year instead of 10%, which is the average over 100 years. So you know, and it was when it was going up 10% a year, it was inflating at 7%. I think the money supply expands at 7%. You tack on a 3% risk premium, that gets you 10%. That's normal. And we're like triple normal, depending upon, you know, what your reference point is. And if you're taking monthly averages or quarterly averages or daily averages.
Right, definitely, yeah. Yeah, I definitely agree that it's a vector. It's on a different scale, and everyone has these different different measurements that they do it by, which is sort of where the debate sort of comes in, where it comes from. But I think the general consensus is that it's definitely going to be a huge issue over the foreseeable future.
I think
I'd love to.
The most important thing for anybody is figure out where you're going to live, and then what is a market basket of scarce, desirable assets inflating at, because you're going to want desirable, scarce assets in the market where you live, and that is your inflation rate. And that's more akin to an asset inflation rate than it is a CPI or any kind of other inflation rate. Once you figure that out, then you have a decent true north to guide you.
Gotcha. I'd love to jump into Bitcoin now a little. In late May, you convened the first Bitcoin Mining Council, which, for people that don't know, has a goal to educate and promote transparency of Bitcoin and Bitcoin mining. In the latest update, I saw you share that the global Bitcoin mining industry now uses 56% sustainable energy. Notably, Elon Musk has stated that when it is clear that over 50% of Bitcoin mining comes from sustainable sources, Tesla would again allow for purchases made using Bitcoin. Could you first of all give us an update on the Bitcoin Mining Council, how China banning Bitcoin mining has affected it? And second of all, as Bitcoin mining begins to trend towards coming from completely sustainable sources, do you think it becomes an even more attractive investment for institutions?
I think, look, the Bitcoin mining network is the security network for Bitcoin. And the way we get security is we plug in a SHA-256 mining rig, an ASIC, into a power source. And before May, half of that security was coming from China. The Chinese exodus is driving a forced decentralization. All that equipment is moving out of China, or at least a lot of it. Some of it will be mothballed. Some of it will be moved out of China, and a lot of it has been taken offline. The result of that is that Bitcoin mining everywhere else in the world is 50% more profitable today than it was 2 weeks ago. No, sorry, 50% more revenue today than it was 2 weeks ago. Dramatically more profitable. It'll get more profitable the next difficulty adjustment. I think that the Bitcoin network is reorganizing, distributing. A lot of people that own Bitcoin in China had to sell it in a hurry, so they had to take a haircut in order to liquidate their Bitcoin and convert back into RMB, and that caused volatility in the market. I think that the Chinese exodus, it's a tragedy for the Bitcoin miners in China and Bitcoin holders in China, right? I feel awful for them. I think it's a mistake for China, the country. They're going to lose $1 trillion. They're giving up. They had half of the mining industry in an industry that's growing 100% a year, and they gave it up. I think that the result is the Bitcoin network will shift to the West. It's a benefit and a windfall for the rest of the world. It's good for Africa. It's good for South America. It's great for North America. It's an opportunity for progressive miners. It's an opportunity for progressive politicians and political jurisdictions. Texas wants the mining. Why wouldn't you want the mining? This Bitcoin mining is the highest value and use of intermittent or stranded energy of any industry in the world. So if you have a volcano on an island, if you have a waterfall in the middle of Africa, if you have wind power 1,000 miles north of a population center, it's worthless for most other uses. I need a use where I can drop a data center 1,000 miles away from a population center and monetize the intermittent energy with a very narrow pipe, like a satellite uplink. Can you do that with Netflix or Google or AWS? No, you can't, because they need these big fiber optic pipes to stream video. So no one is, what am I going to do? Set up an aluminum smelter 1,000 miles north of the Arctic Circle? No, right? You can't move electricity more than 500 miles on a power line. And if you want to sell electricity to consumers, they're not going to pay more than 10 cents a kilowatt hour. And modern Bitcoin mining rigs will generate about 35 cents a kilowatt hour at the current price. So this is a great industry. It's spreading all over the world. Because it can monetize intermittent stranded power, it tends to go to renewable power and sustainable power. And because it works intermittently, and because it can monetize the entire power source, then that means it goes to all these places where you've got energy to recycle or wasted energy. And so it's a very disruptive, powerful force for the energy industry for good. It was doing good things in China. They had too much hydropower and they were monetizing it, making billions and billions of dollars off of it. And now they've just got too much hydropower and too much power, and they're not going to monetize it. So, I think ultimately the Chinese exodus is a pretty big, if not the biggest macroeconomic or the biggest driver in the Bitcoin industry for the year. But ultimately, it'll be a good thing for Bitcoin once we get through the second quarter and people start to adjust to the dislocations.
Right. So I'm sort of getting the short-term pain, but overall long-term, it'll sort of turn into a positive, is what I'm understanding it as.
For the rest of the world.
For the rest of the world, yeah, not for the China miners that got banned.
The way to think about the world is there's the Western net, which is revolving around the US dollar, the English language, American technology, and American law and American capital markets. Wall Street, Silicon Valley, Google, Facebook, Amazon, Apple, the US dollar. That's the US and the EU, and the entire Western world that's tapped into the US and the EU. On the other hand, then there's the China net, and the China net doesn't let you use Facebook, no Twitter, no Google Maps, no dollar. It's not English. It's Chinese, CNY, RMB, Chinese capital markets, Chinese capital controls, Alibaba, Alipay, WeChat, Weibo. They've got theirs. There's 2 billion people in that sphere of influence. There's 6 billion people in the other sphere of influence. Bitcoin kind of got pushed out of the China net into the Western net. That's what happened with the China exodus, and you're watching it right in front of your face. But it's not surprising, nor is it necessarily a bad thing for Bitcoin. Google is pushed out of China. Amazon is not in China. Facebook and Twitter are not in China. It's to be expected. They've got capital controls, and the China wall applies to capital, and it applies to technology, and it applies to the culture and the law.
Gotcha. And now I did just want to talk a bit about the Bitcoin price. I know you don't speculate on short-term price action, and you're in Bitcoin for the long term. The best holding time is forever. But I did want to ask, over the last 12 months, we first saw a huge wave of good news come out surrounding Bitcoin, institutions starting to add it to their balance sheets. Of course, MicroStrategy, Square, PayPal, we saw MassMutual, and eventually Tesla. And then we've sort of seen this wave of bad news, one after another, and this price pull back about 55%. We've now been trading in this sort of price range between $30,000 and $40,000 for about 2 months now. I wanted to ask you, in your opinion, what do you think is sort of the next price catalyst for Bitcoin? Do you think we are just going to naturally continue to see institutions adopt it and add it to their balance sheet as they sort of get more educated and understand it better? Or do you think it's just inevitable that we see the Bitcoin price continue to grind on higher as it always has?
I think that the network is maturing. So the further we get from the China exodus, the healthier the network gets, because that was a big shock for the network, or just a lot of dislocation to absorb. I see a lot of on ramps for Bitcoin getting wired. You've seen the strengthening of Square and Coinbase and PayPal. You see NYDIG doing really good work to wire up a lot of community banks and traditional institutions to Bitcoin. You're seeing the bigger banks, Goldman Sachs, and Morgan Stanley and others getting involved. the Bitcoin derivatives market is growing. Companies like MicroStrategy, or you could think of us as, we're in essence, we've created a stock, which is a derivative, convertible bonds that are derivative, secured bonds that are derivative. The key is to create this channel between the ocean of conventional traditional assets and this crypto pond, if you will, right? And then there's a channel that is carved, and a lot of people are doing really good work in order to carve that channel, to normalize expectations, and just takes time. So I think that as time goes by, there are just more and more ways to buy Bitcoin and buy instruments and financial products that are backed by Bitcoin. All of those are going to create more demand for the underlying asset. And as that demand builds up, then you would expect the price will continue to appreciate, because the macroeconomics are very favorable, right? We know we're going to continue to expand the money supply in dollars and euros and everywhere else in the world. The technology dynamics are very favorable. We keep improving Lightning apps, Square, Cash App, mobile apps. You've got these, like BlockFi's got a credit card and it gives you Bitcoin as 1.5% cash back. Call it Bitcoin back. So all those things are rolling out. And as those things roll out bit by bit, the entire asset class will just get more energy flowing into it. So, as I said, the best thing to do is, if you're not going to hold it for 4 years, don't buy it at all. Because if you're thinking shorter than 4 years, you're kind of more either a trader or a speculator. The best period is forever. And if you can't be forever, look out 10 years, and then you won't have the anxiety. Make sure you get the staying power, and don't get yourself in a situation where you might get forced liquidated on a 20 or 30 or 55% downdraft. Because the key is, it's like, if you could buy 50 blocks in Manhattan 200 years ago, there's no way you wouldn't have made money unless someone called your loan and liquidated you out and you had to sell at some time in the last 200 years. So you just want to have the staying power to stick around for the long term and let nature run its course.
Gotcha. Yeah, that is something I try and preach on the channel a lot, is to, especially if you're not experienced with it, don't mess around with leverage. Don't put yourself in a position that you can get, like Bitcoin is hugely volatile. So don't put yourself in a position that you can get liquidated out on these pullbacks that we do see. Because long term, I think you're going to regret it. Now, I did want to ask, what do you think, just talking about institutional adoption of Bitcoin, what do you think is sort of the roadblock that sort of is stopping? Like, we've seen a few institutions jump into it, but if you looked at it as a percentage of, say, the entire S&P 500, it would be a small percentage. What do you think is sort of that roadblock that's stopping a lot of other companies from adding it to their balance sheet? Do you think it's just not being educated? Is it regulatory hoops that they have to jump through? Or what do you think is stopping them from getting into it?
Well, if you're a public company with a GAAP accounting system, the number one negative is indefinite intangible accounting for digital assets. And a year ago, there was no publicly traded company that had this on their balance sheet. So this wasn't a priority for accounting profession and FASB. Today, there are billions and billions of dollars with publicly traded companies. But as long as you have indefinite intangible accounting, that's opaque, optically suboptimal. What it means is I could buy $1 billion of Bitcoin. It would go up by a factor of 10. I'd have $10 billion worth of fair market value, but I would be showing it on my balance sheet as being worth 700 million and take a $300 million loss in the quarter. So you can see, if you're a CFO or a treasurer and you pride yourself on an optically beautiful P&L and balance sheet, the volatility you're concerned about is not the volatility of the asset, it's the accounting volatility. And that comes because indefinite intangible accounting means you can mark it down. In fact, the way indefinite intangible accounting works is you buy something, baseball cards, And then you go to everybody on the street every minute of the day, and you ask everybody if they'll buy those base cards, that baseball card collection from you at the same price as you bought it. And if anybody in the world at any point in time says they would pay less, then you have to mark the baseball card collection down, and you can never mark it up again. So you're pretty much finding the most pessimistic bid in the world. And so that's the real liability for a CFO. The way to get around it is you'd have to buy it as a fund, and it would be a security. But then there are complications with companies owning large amounts of securities, something called the SEC 40 Act. And if you have more than 40% of your tangible assets as a security, then you become a financial entity and you trip that act. So the accounting is a challenge for publicly traded companies. It's not a problem for high net worth individuals or private institutions or macro hedge funds, because they've got different situation. And so what you probably find is the most aggressive institutions, they won't be publicly traded companies. They will be someone that was going to buy $10 billion worth of gold and silver, or $1 billion worth of gold, and I'll think, I'll just sell the gold and I'll buy Bitcoin, right? If I'm changing the macro trade. And I think over time, the accounting profession will review this. There's an awareness amongst regulators. This is an issue. Tom Emmer, who's a congressman in the US, wrote a letter to the head of FASB saying, and it was signed by 6 other congressmen, saying you should really take up the issue of digital asset accounting, because if one company owns 10 billion worth of Bitcoin and one company owns 500 million worth of Bitcoin, they both look the same on your GAAP statement. If they both bought it at 500 million and it traded at 500 million. So it's not in the best interest, I think, of the investors or the companies, but it's a pretty bright line. It is what it is. That's what the accounting rules say.
Right. Yeah, no, that actually makes a lot of sense. And is an interesting point I haven't thought about before. Just moving on, I have an interesting question that got posed by the subscribers. On the channel, I try and stress the importance of evaluating all of your investment decisions from every viewpoint, including opposing viewpoints. So if you had to flip the script and argue against Bitcoin, what, if any, in your opinion, is the most legitimate threat to Bitcoin? And sort of the most common FUD that I see thrown around sort of in cycles on Twitter is government intervention, the whole USDT Tether situation, quantum computing, or is there something else? What do you think is there a most legitimate threat to Bitcoin?
Bitcoin's like electricity, and this is the first year, and I show you electricity and no one else has electricity. The first legitimate pushback is this magic and demon spawn, from hell, right? If I showed you electric appliances, you might think this is kind of magic and scary. So education, what is it? And I think the second issue is legitimately, so I wire your house with electricity and there's electrical fire and it burns your house down. And now the issue is, will the city have electric power ordinances? What are the laws around electricity? What's the regulatory environment? So I think education and regulatory clarity, and the FUD, all the FUD is, I don't know what it is, I'm afraid of it, right? Or we don't know what it is, what's our regulatory view? Like with digital assets, you've got digital property like Bitcoin, and that's different than digital currency like Tether, and that's different than a digital platform like Ethereum, and that's different than a digital application like Uniswap. They're different. They have different regulatory implications. You're going to regulate a currency, in competition with other currencies. You're going to regulate property in competition with other properties, right? I'm not going to be able to give you $1 billion worth of Bitcoin with a $900 million capital gain in it and not pay capital gains tax on it, right? So there's going to be property tax. you're going to regulate applications. If I sell, life insurance to 16-year-olds off of a DeFi exchange, there's probably going to be an insurance regulator in Australia that has interest in life insurance. What if you buy life insurance and murder your parents and collect, right? And, it's like no KYC and your parents are dead and the son is rich. And eventually someone's going to find out that the kid managed to find some loophole. So applications will have their regulatory clarity issues. The platforms will have their, Google's a platform, Amazon's a platform. Eventually the regulators have interest in that. I think that the question really is going to be, how will regulatory clarity evolve? It'll be different in every jurisdiction. And what is this stuff? What is it? If Bitcoin is digital property, it gives property rights to 8 billion people. It's just as important as fire and electricity. Okay. How long do you think it took people to accept fire? What if I walked in your house with a flaming torch and I said, I give you fire, and you were at dinner with your kids? You might tell me to get the heck out of the house. So I think people have to get comfortable that fire is safe, electricity is safe. They got to get comfortable with it. And then after that, they got to understand how they want to deal with it. And that's why you want to be strapped in for the long term, right? Because over the long term, the civilization is going to accept fire, electricity, and digital property. Over the near term, how they accept it. Well, look, North Korea and Cuba actually don't accept private property and they don't accept the internet and they're dark, right? And so you will get occasionally a communist society that won't allow you to have private property. And you will get societies that have tighter or looser regulatory environments on capital. There are capital controls in China. You can't wire $1 billion from China out to London. You can't do it. You can wire $1 billion from New York to London. Right. So you're going to see things like that. And you just have to be thinking hard. Are you investing in property? Are you holding currency? Are you investing in an application? Are you investing in a platform? And then how's it competing with all the other in-kind and not in-kind platforms? And how do you want to manage your portfolio? I think that's what I'd be thinking if I'm an investor.
I love that answer. I think that's brilliant, likening Bitcoin to fire or electricity. That's a great way to think about it, I think. I love that. Just while we are on the topic, some of the most common FUD or doubts I see about Bitcoin, and it sort of comes around like clockwork, just like sort of how China seems to ban Bitcoin in cycles as well. It's the USDT or the Tether situation. So for the people that don't know, Tether is now by market cap the third largest cryptocurrency. And the story goes that they artificially inflate the Bitcoin price by printing unbacked USDT and refusing to get audited. In your opinion, does this affect Bitcoin in any way? And is it a legitimate threat or a potential black swan event that investors should sort of be worried about?
If you're an investor, I would say that that means by definition, you should have a time frame of 10 years. And that means no, you shouldn't be worried about it. If you're a speculator or a trader and your time frame is 10 days, 10 hours, or 10 minutes, then yeah, it could move the price around. But what is it? It's FUD. The Tether is FUD. It's all FUD. And let's come back to the key point. Bitcoin's not a cryptocurrency. Bitcoin is a crypto property. It's digital property on a decentralized crypto network. Tether is a digital currency. You could almost call Tether a cryptocurrency. And it is much more akin to a decentralized, or it's a money market fund with light or no KYC AML competing with other money market funds. If you're buying Tether, you're taking money market fund risk. The people that operate Tether in theory might invest your money into credit instruments that they default on. So you've got some kind of credit risk, like you invest in a centralized money market fund. And then you've got the regulatory question of, will the US Fed or the Treasury or the EU decide that Tether is violating, banking money transfer rules because it's on crypto rails? And those are the two risks you accept when you're buying Tether. Tether's one, it's the leading digital currency. There's DAI, there's Circle. I mean, there's a lot of other the digital currencies, and they compete with centralized currencies. When my company bought billions of dollars of Bitcoin, we never used Tether. We wired dollars into a bank and we bought Bitcoin. So all of the institutions that can wire dollars around the world will wire dollars or euros into an exchange. They will buy Bitcoin. And I could care less about Tether, right? It's a joke. People are like, well, what if Tether does? I don't care what Tether does. Tether is a money market fund. Tether failing concerns me no more than any other money market fund failing or any bank failing, right? If a bank has $50 billion in it and it fails, why doesn't that support Bitcoin, hurt Bitcoin? Well, in the near term, it might, right? In the near term, anything can create a crisis. But at the end of the day, the key is to understand that Tether is a digital currency and it's really a money market fund, a decentralized money market fund in cyberspace. And Bitcoin is digital property in cyberspace. If you own 100 city blocks in New York City and some bank that has billions of dollars in New York goes bankrupt, do you care? Probably not. If you found out that someone used Tether to buy blocks in New York City, okay, well, hopefully they bought the Bitcoin before the Tether failed. If they didn't, then they have an issue. I really think that most of the Tether FUD is primarily being driven by other alternative stable coins or altcoins or someone else that has an agenda where they're hoping to replace Tether with their own altcoin. It's just competitive FUD that's spread because people can spread it. It's like if I ran a bank and you ran a bank and I wanted to create a run on your bank, I would say, I heard that Jamie's bank was not audited. So I'm hoping that they'll take money out of your bank and put it in my bank. And there's just a lot of that competitive maneuvering that goes on in the crypto industry, primarily because the crypto industry is not a security. So a lot of this stuff wouldn't happen if you were securities, because you have securities liability, civil and criminal liability for spreading those rumors. But in the crypto industry, it's unclear who the regulators are and whether or not you have any liability. So people say things more freely sometimes.
Yeah, no, that definitely makes a lot of sense. I like that. Just while we are on the topic of FUD, and just a final question on it, the most recent FUD that I've seen circulating on Twitter and Reddit is that if the Bitcoin price dipped to a certain point, there seems to be a notion that you would be forced to sell or liquidate any of your position or MicroStrategy's Bitcoin. From my understanding, as you are a majority stakeholder of MicroStrategy, this is not the case, but I just wanted to ask you and confirm with the source, is there any situation that you would be forced to sell the holdings of Bitcoin?
No. Yeah, that's just FUD. The situation is MicroStrategy has some senior debt, but that's $500 million of debt, and it's secured against the cash flows of the software company. And there are no conditions of default. It's a bond. So if the company didn't generate cash flow, the debt wouldn't be in default. It's unrelated to Bitcoin. We pledged some collateral, or Bitcoin as collateral, to make the bondholders feel better. But if the Bitcoin went to zero as collateral, there'd be no condition of default on the debt. So the $500 million of senior debt has no conditions of default. We just other than we got to pay the interest on it, which is $30 million a year. The company generates a lot more than $30 million a year. So there's no conditions of default for that. There's $1.7 billion worth of converts. They're not secured. There is no collateral posted against them, right? And they're convertible to equity, and we can convert them to equity. There is a time frame involved. but the Bitcoin is not pledged as collateral. So the price of the Bitcoin is irrelevant. If Bitcoin went down by 80% or 90% or 95% or 99% or whatever, it just doesn't have an impact on that debt. That's long-term financing. So, and then the last point, so people think, well, if Bitcoin went down 90% tomorrow, we would just be waiting, right? And then people think, well, the board will make him sell or do so. They're like, oh, blah, blah, whatever. I have the majority voting stock in the company. I have 70% of the voting shares in the company. So no, I don't think that's going to happen. And the company has a strategy. The strategy is acquire and hold Bitcoin. So our financing is permanent, and it's the way you get yourself in trouble with financing is you basically take a margin loan that's marked to market every minute of the day, and you have to post additional collateral if you fall below that margin. We don't have any of that financing. We have mostly equity, convertible financing, which is unsecured, and then a little bit of senior debt, but the senior debt is, again, secured against the intellectual property and the cash flows of the company. That's why we were able to do what we did. So ultimately, the Bitcoin price will be volatile. I watch it. If a decade from now it didn't go up, it won't have been the best strategy, but what it does day to day, week to week, month to month, even year to year isn't really that relevant. We have a long-term strategy here.
Yeah, fair enough. I remember seeing it and just thinking it was ridiculous. And to my understanding, that was the case. But it's just, I don't even know where people come up with that, the sort of narratives that I see spun around and spread on Twitter. To switch to a more positive note, this was the most requested question from my subscribers to ask you. Obviously, you've been asked to death in so many different interviews about all different aspects of Bitcoin. So the question is there an underappreciated aspect to Bitcoin that you think should be talked about more? Is there a question that people are not asking about Bitcoin that you think needs to be asked?
I think the single most important thing to understand about Bitcoin is the first decentralized, truly digital property in the history of the human race. If you want to give music to 8 billion people, you got to give them digital music. And if you want to give education to 8 billion people, you need to give them digital books and digital education. And if you want to give wealth to 8 billion people, you need to give them digital property. So Bitcoin is profound in the same way that streaming music and YouTube is profound and iBooks is profound. Except that those things I just named created trillion-dollar companies. Facebook, Google, Amazon, Apple all became trillion-dollar companies because of digital books and digital education and digital music. Digital property is 100 times more important than digital books, digital music, digital friendships, digital relationships, digital retail. Okay, so the underappreciated aspect here is we have the ability to give 8 billion people digital property in the palm of their hand in a $50 Android phone, and you can program it with the next Apple chip or Samsung chip to 1 million transactions a second, and you can move it at the speed of light. And people don't get that. They keep thinking, oh, well, it's slow. There's only 300,000 transactions a day on the blockchain. Well, duh, that's the settlement layer. If you go to Lightning and PayPal and Square Cash App and all the layer 2s and layer 3s, you're going to get 1 billion transactions an hour. And so Bitcoin is the ability to move property at the speed of light 1 billion times an hour to 8 billion people. And with Moore's law, upgrade it as fast as you can upgrade the chipsets. If people started thinking about that a bit, and they realized that the alternative is what? Ship everybody an ounce of gold? Like, how are you going to give 8 billion people property? You're going to give them $387 worth of land in California? Good. How are you going to program that, move that at the speed of light How are you going to flash loan that to 100,000 counterparties on a Saturday afternoon? So digital property is the way that we make everybody on earth wealthy, in the same way that YouTube or iBooks or Google Maps or digital books and digital information is the way that you make everybody on earth intelligent. It's a pretty big deal. And I think everybody is still stuck in this. If you're a financer, most of the institutional investors, they think, oh, it's just another type of gold. I can buy some gold. I can buy some commodities. I can buy some Bitcoin. It's an uncorrelated speculative asset. And the crypto people are like, oh, well, it's just one more crypto thing. And other people think, oh, it's just a way, that I can move something peer to peer. What hasn't registered in their minds is that the mobile phone's getting successively more valuable. When we put photos on the mobile phone, Apple became worth an extra $100 billion. And when you put videos on it, and when the iCloud was holding all your videos and all your photos and all your relationships, all your communications and all your documents, Apple became a $2 trillion company. And no one said to themselves, heck, what if the iCloud has $50 trillion of money in it? What if Apple becomes a $50 trillion bank? If Bitcoin is digital property, then Google can become a $20 trillion bank, or Facebook can. But if Facebook can become a $20 trillion bank and Apple doesn't, then isn't that a threat to Apple? And if that's a threat to Apple, then Bitcoin becomes the technical imperative of the 21st century, and it rebuilds the banking industry, the power structure, the status quo. Jamie, aren't Google and Facebook and Twitter and Apple, aren't these already the most powerful companies in the world? Already?
Definitely.
And didn't they get already that powerful with digital video and digital communications? Think about how powerful somebody becomes when we have digital property. Because what you're going to see is $200 trillion of money drain out of land and stocks and bonds and currency and collectibles. And when we demonetize $400 trillion worth of property and half of it flows out, and it's just like we took the information out of the books and libraries, we took the music out of the orchestras and the pianos and the CDs. What happens when we take the money out of the property and we put it into the Bitcoin blockchain, and then we hand that to technology companies to do with as they will? That's a earth-shattering big idea. It's going to change the balance of power between nation states. It's going to change the balance of power in the tech industry. Someone's going to do it, and someone's not going to do it. And the company that does it is going to all of a sudden not be worth $1 trillion anymore. They're going to be worth $10 trillion. And there's going to be another company that won't do it, and they're going to be the Kodak, of the information age. And I don't know which. That's what's underappreciated. People are kind of screwing around debating over whether or not Bitcoin trades up or trades down in the next month or 2 months. They're just thinking small, right? The right way to think is, again, it's electricity. Every business in the world didn't have electricity in 1900. And ask yourself the question, what happened to the companies that adopted electricity? And what happened to the ones that rejected electricity?
I love that. That's a great answer. And you did briefly touch on the just before the layer 2 and 3 solutions, and how many transactions can take place on the network. I think that is also a point that not many people is definitely underappreciated as well. Just switching gears a bit, I did want to talk about, just briefly in some questions, is Ethereum the second biggest crypto asset? In previous interviews, you've referred to Ethereum as a unicorn in the crypto ecosystem and Ethereum as the leader of crypto application networks. I just wanted to understand from an investment standpoint why you and MicroStrategy sort of won't go near it. Is it too risky with ETH 2.0 coming up either at the end of this year or next year? Is it just untested? Is it sort of too far out on the risk curve from an institutional standpoint? There's too many unknowns. Is that sort of the reasoning behind, from an investment standpoint, why you won't go near it?
If you wanted to segment the crypto world, a magic quadrant would be, you've got property, you've got currency, you've got platform, you've got application. The real world metaphor for that would be New York City. I give you $1 billion, Jamie, and you can buy $1 billion worth of land, like 6 blocks in New York City. I don't know what it would buy you today. It might not even buy you 1 block. It might not even buy you 1 block. Or you can buy $1 billion of a building, part of the Rockefeller Center. Or you can buy $1 billion of US dollars in a bank in New York City. Or you can invest in and buy $1 billion worth of companies in the buildings in New York. The companies are the applications. The $1 billion of US dollars is the currency. The building is the platform. The land is the property. Some people, if you have a lot of capital and you want to invest it for 100 years and you don't want to you can't own the currency, right? You know, that's going to debase. That's going to inflate and lose its value at 10% a year or more. So you don't do that. Do I want to own the building? Do I want to own the companies, or do I want to own the land? Companies come and go. The building will be around for 50 to 100 years. And the land will be around for 1,000 years. They're just different business propositions. If you don't have a lot of capital, if you have no money, when I started out in business, Jamie, I had $5,000 in a furniture loan. I started a business and I invented something. If you want to go from $5,000 to $1 billion, you need to start a company. You're on the application side. If you have $50 million, you can take the 50 million, borrow 500 million from the bank and buy a building. And that's the platform side. If you have $500 million or $1 billion, you might just buy the land and, wait. One is a more capital intensive strategy. They might all work, but they're for different types of investors. Now, one last risk spectrum I'll give you. There are 4 types of investors. There are savers. Those are people that want to save money for 100 years, and I want to give it to my grandchildren, or I want to endow a park to last forever. There are the investors. I want to invest in a company for 10 years. I'm going to buy Apple stock in 2010 and hold it for a decade because I think eventually people will like this iPhone thing. When you're an investor, you're betting on a portfolio of risk. You're taking risk. When you're a saver, you're converting weak assets to strong assets. I'm taking my dollars and I'm trading them for Bitcoin. I'm trading my bolivars in Venezuela for dollars. I'm trading my pesos for dollars, and maybe my dollars, if I don't want to buy Bitcoin, I trade my dollars for land, or my dollars for gold, or my dollars for collectible artwork or trophies or sports teams. I'm creating something which will not be debased by currency expansion. So savers have a long time horizon. They're risk adverse. Investors have a mid-time horizon. They take some risk. A trader is trying to guess, they're managing a portfolio of risk derivatives, first and second derivative of risk. Will Apple beat their numbers this quarter? Will the 10-year interest rate move faster than the 30-year interest rate? Is there more demand for Bitcoin in Tokyo right now than there is in Singapore right now? Right? You're trying to get in between two things and you're arbitraging it because you're a trader. That's a shorter time preference. You have to have proprietary models, proprietary liquidity information, or lifetime of interest, lifetime of experience in that. And then the speculators, they're like, I went to Vegas, I bet on black, I won. I bet on Dogecoin because Elon Musk was going to go on Saturday Night Live. I thought it would go up. I thought it would go up between 3 p.m. and 5 p.m. on the day that he was going on. Maybe you can trade that, but maybe you're speculating that. if your MicroStrategy, our strategy is to acquire and hold Bitcoin. We're a property development company, almost like a cyber REIT. When Howard Hughes went to Vegas, he looked around, he said, one day there'll be a great city in the desert and people will come here for conventions and to gamble and for recreation and hotels. So he bought all the land. And they're still building houses and buildings on the land that he bought 50 years after he's dead. They built entire cities on land that Howard Hughes built or Howard Hughes bought. He wasn't, 50 years after he's dead, people are developing the land. He didn't know what they would do with the land. He just thought Vegas. Other people created hotels, Sheldon Adelson, he wants to own the Sands and he's in the casino business. It's a different business. If you're good at it, you're good at it, right? And if you're just going to run, and Sheldon Adelson started, hosting conventions. He went from the application to the platform space, maybe had some land along with the platform. Howard Hughes had a lot of money, right? He was a rich man. He just bought everything and he waited. So they're different strategies. MicroStrategy isn't, we don't invest in applications. But I wouldn't invest in a Uniswap any more than I would invest in an individual stock. Like I'm not buying, fill in the blank Uber stock. If you have like a SoftBank and maybe you would invest in Uber or Airbnb, maybe you would invest in, a mega unicorn, a big thing in the crypto space. You got to analyze it, right? Uber had regulatory issues. Airbnb had regulatory issues. A lot of crypto things have regulatory issues. I know I have a pretty good feeling for what the regulatory uncertainty is around digital property. Like, am I confident I can buy $1 billion of Bitcoin and hold it for a decade? Yeah. Can I move $1 billion of Bitcoin and not pay tax on it and not KYC it? Probably not. Is that clear somewhere? Not clear everywhere. Do I want to test that? Not really. So if you're a crypto venture, if you're a venture capitalist and you're a startup, you go the application route. And if you're a big mezzanine investor, crypto investor, and you have a higher risk tolerance and you have more capital, maybe you look at some of the bigger cryptos and the platforms. If you're a insurance company and you sell life insurance policies, and you have $100 billion worth of money in sovereign debt that's currently yielding 2% interest, and you're thinking the negative real yield is -5 or -7, maybe you want to move $5 or $10 billion of that into digital property like Bitcoin. To do what? Hold it for a decade, hold it for 30 years. See, there are different use cases, different types of investors. Everybody's got to find their use case. And of course, if you're an individual, maybe you say 40% of my money is going to be into savings. I'm going to put that into some kind of risk off asset. 30% is for investment. I'm going to find the coolest company or the coolest investments I can. 20% or 10% is trading. I trade this algorithm, and 10% or 5% is speculation. If you tell me you want to go to Vegas and you want to gamble and you're going to gamble 10% of your money because you enjoy it, maybe you bet on the Lakers. Like, who am I to tell you you can't bet on the Lakers, right? That's your business. Have at it. Just don't gamble so much that you lose your house and you put your kids out on the street. That's irresponsible, right? Don't lose the rest of your assets, and then figure out what your risk tolerance is and what your time frame is. If your time frame is short, I would tell people, don't buy Bitcoin if you don't have a 4-year time frame. You want to go less than 4 years, right? You're more like a trader, speculator. Now you got all complicated hedging algorithms. Don't ask my advice either on that. Like, I don't have any advice for a trader or a speculator. I don't, Dave Portnoy is in the gambling business and he has a lot of fun, and Barstool Sports does their thing. I wouldn't know how to gamble other than I would just take some money and say I might win it, I might lose it. I put a fun wager down.
Yeah, no, fair enough. And a point that you brought up previously is that what Ethereum is trying to do, it's trying to dematerialize, it's trying to everything, insurance companies, the financial system, banks, and sort of the regulatory risk, I think, There's just so many unknowns about it. And then with ETH 2.0 coming up, switching to proof of stake, changing the protocol, it's definitely a unicorn, as you said. High potential, but the risks and regulatory, there's just so many unknowns surrounding it. I really like that point. Moving back to Bitcoin, over the last 5 years, Bitcoin has averaged 350% return per year. Previously, you've stated that you could foresee Bitcoin hitting a $1 million price point within 5 to 10 years. I just wanted to check in and see if this is still in line with your expectations. And over the long term, how much do you expect Bitcoin to appreciate per year over the next, say, 10 years? And do you expect to see sort of diminishing returns from that 350% returns that we've seen since its inception?
My recollection is, as of now, looking back from the current day for 10 years, I see some numbers showing about 110 to 120% annual appreciation a year. And that's 10 times better than the S&P. So I think that's the best performing asset class. But, depending upon what dates, if you pick a different 10-year date, you might get a different number.
Yeah.
It all comes down to what date you choose. But what I think, of course, is Bitcoin will continue to appreciate more aggressively than other asset classes because it's the technically superior property. It's the least inflationary, and it's engineered to do this. So I expect it to outperform other comparable assets. It'll be much better than bonds, much better than gold, much better than a market basket of equities. It'll be much better than all the currency derivatives, because all the currency derivatives are based upon the net present value of the cash flows, or the discounted value of the cash flows. And if the discount rate increases, the value of the cash flows falls. So I think this is just a continual thing. Will it go up at 110% a year for the next 10 years? At some point, presumably, its growth rate slows down as the law of large numbers kicks in, and it goes from growing 100% a year to 50% a year to 40% a year to 30% a year to 20% a year to 10% a year. But I do think it'll keep appreciating over a long enough time frame. And I think it'll appreciate faster than any other choice that I can come up with, right? So I take a long perspective. And in terms of where it can go, I look at the value of gold, about $10 trillion of gold, and I don't see any reason why it doesn't flip that. And I look at 100 trillion in bonds, and I look at at the size of the global equity market, and I think 10, 20, 30% of that or more just wants to be in a store of value as a monetary index or just a property. So I think a portion of bonds, a portion of real estate, most of monetary gold, a decent portion of gold, a decent portion of ETFs. When people are putting money in an ETF like the S&P index, they're kind of just trying to save their money.
Yeah, definitely.
Like if they really wanted to bet on Apple, they buy Apple stock. If they wanted to bet only on big tech, they buy big tech FANG or they buy NASDAQ. But when they're buying the S&P 500, they're just buying a diversified portfolio of equity because they don't want to keep their money in a savings account yielding 0% interest. And they know that bonds you're taking the risk of losing all your money, but you're only getting paid 1 or 2 or 3% interest or something. So as Bitcoin grows, I think it attracts that capital. And so why shouldn't it go to 10 trillion, then 20 trillion, then 40 trillion, then 80 trillion? And, so do I see a path to $1 million a coin? Sure, I do, right? When it gets to $1 million a coin, if you call me and ask me, what are you going to do? I'm going to wait for it to go to 2 million a coin, right?
Right.
When it gets to 2 million a coin, and you ask me, what am I going to do? I'm going to say, I think I'll just hang out here because it's still digital property. And if it got to that point, it must be wired into 100,000 applications and billions of people's lives. So I think it's just a patient waiting game.
Yeah, that makes a lot of sense. And now I did want to speak on, there's this idea you often speak on that people and investors need to invest 40 hours of their time into understanding Bitcoin. As to my understanding, back in 2013, when you first considered Bitcoin, you rejected it. And I saw a tweet the other day. You tweeted out that its days are numbered. However, in 2020, something changed. I wanted to ask what that light bulb moment for you was, and more specifically, what did that 40 hours of investment look like to you, and what does it entail?
Well, I didn't have any problem that would, or any urgent catalyst that would cause me to spend 40 hours studying Bitcoin before March of 2020. And so anybody that studies Bitcoin for less than 40 hours is just being bounced around like a pinball by different opinions of different influencers. Having a 1 hour, 2 hours, 4 hours is really difficult. When you get to 40 hours, you start to kind of get your hands around what's going on. If you want to really understand it, you need 1,000 hours, but let's say 40 hours is the point at which you kind of get the idea. So the question is, what would cause you to want to stop and spend 40 hours of your life studying something new? And the answer is the K-shaped recovery. When Main Street shut down, when Wall Street immediately recovered, when the Fed announced that interest rates were going to stay at 0% for the next 3 to 4 years, and when the NASDAQ and the New York Stock Exchange started hitting all-time highs in the middle of the summer and just charged forward like nothing had happened, then financial assets delaminated from Main Street operational assets, and the monetary inflation rate tripled. When the monetary inflation rate went to 21% and the interest rate on treasuries went to 0%, then you had a negative real yield of minus 20% on all treasuries or all assets. And that meant that in 3 years, you're going to lose half your wealth. And that meant within 9 years or within 10 years, you were going to lose 75 or 80% of your wealth. So I guess in March, when I realized I was going to lose 80% of all the money I had if I did nothing, that was catalyst, or that was, I guess, enough of an influence to cause me to sit down and spend 40 hours studying. If I told you, by the way, I was going to take 80% of your money next year unless you did something, don't you think you'd stop and figure out how to not lose all your money?
Yeah, immediately. For investors that want to put 40 hours into learning Bitcoin, what would be your recommendation of sort of the time investment, what they should be doing? So there's a Bitcoin white paper, but that's obviously not going to take you 40 hours to read. Is it watching Gary Gensler lectures on blockchain? Is it just reading everything you can about it? What is that sort of 40 hours would be your recommendation for investors that want to learn and understand Bitcoin?
If you go to hope.com, HOPE, Bitcoin is hope, remember that, and go to hope.com. And on hope.com, you'll see a selection of Bitcoin courses, including Gensler's. You'll see a Bitcoin for Everybody course that my foundation created, Bitcoin for Everybody. It's free. You'll see all the collection of books like the Bitcoin Standard, The Bullish Case of Bitcoin. You'll see free resources. You'll see a bunch of video sessions and lectures. You'll see a bunch of research. You'll see a collection of Bitcoin influencers and leaders. You'll see a selection of Bitcoin podcasts. So you can just go ahead and work your way through that. And I think once you've gone through 40 hours of that, you'll have a pretty good sense. That's what I would do.
Yep, that makes sense. And now just to wrap up the interview, I do have 2 questions that are not about Bitcoin or cryptocurrency. They were both posed from, I asked my subscribers what they wanted to ask you, and these were 2 of the most requested questions. The first one is on the topic of motivation. You have obviously been incredibly successful in your life, and you've become incredibly wealthy as a result. With MicroStrategy, you have the Saylor Academy, and now with Bitcoin. The question is, how and why do you continue to work so hard when you have built generational wealth that will last centuries? What do you do it for now, and where do you pull your motivation from to continue to work so hard every day?
My operational interest at MicroStrategy is to spread intelligence everywhere. And so it's been a vocational passion of mine. And and I enjoy that. And I think it's really great to make enterprises and people smarter. So that's cool. My avocational passion at the Saylor Academy, Saylor.org, is a nonprofit foundation, and all of my excess money goes to that foundation. And when I die, my assets will finance that foundation. And that foundation's mission is to make education free for everyone, everywhere, forever. I think we're just about to cross 1 million students that we've had enroll. And we just give away free college education. And I think it's possible to use technology to educate the world. So I think that's motivational. I like the idea of making education free for everybody forever. I like the idea of making everybody hyper intelligent. And since I discovered Bitcoin, well, we had to have a balance sheet strategy. Before we didn't, but you can't have an operating, Harvard can't exist without an endowment. A company can't exist without a balance sheet, without a treasury. So we needed a financial strategy, and our treasury strategy became Bitcoin. And as I got more heavily involved in it, I realized that Bitcoin is a profound technology, the most profound technology probably of the 21st century. And for the first time in the history of mankind, we can give property rights to everybody on the planet. And so I began to view that as a moral imperative, an economic imperative, and a technology imperative. And, if you can make everybody rich and educated and intelligent and healthy, then why wouldn't you? It's like, what's more motivational than that? And I guess what motivates me is I feel like it's possible now, Jamie.
Yeah.
Right? It's possible to give 1 billion people a PhD with digital education. It's not possible to give them a PhD with bricks and mortar, but now it is possible. You can give a calculus class to hundreds of millions of people for the cost of the electricity. So if it is, then shouldn't you do it? And I think when I discovered Bitcoin, I realized it's possible to give property to billions of people and give a bank to billions of people. And if it's possible to do it, then why wouldn't you do it? So that's what motivates me and keeps me going.
I love that. And I think that's one of the most noble pursuits you can, educating people, for sure. And now just finally to wrap up, the final question, and it's a bit out of left field, but the subscribers did want to know. It's a bit of a fun question. As someone who grew up in a military environment and whose goal it was to become a pilot in the Air Force and then go on to be an astronaut, what is your opinion on the recent reports out from the Navy and the Air Force of unidentified aerial phenomena and UFOs? And finally, do you think there are aliens out there?
I think that the universe is a very big place, and there are aliens somewhere in the universe. I think that it's unlikely that we've found them yet. I think it's possible they found us, but they didn't bother to show themselves. I think that it's highly likely that if anybody figured out enough technology to come all the way across the vast expanse of space, that they probably can find a way to keep us from noticing them, or they would notice us first before we notice them. I don't have an opinion on all of the UFO, sightings that are leaking. I haven't inspected enough to have an intelligent thought. But I'm sure that somewhere in the expanse of the universe, there's some life form doing something.
Awesome. Perfect. Well, we'll leave it there. Thank you so much, Michael, for coming onto the channel. I think every time I hear you speak, I learn so much more. So it's been an honor to have you on. And I know the subscribers are going to absolutely love that. And I think I'm going to go out and buy more Bitcoin.
Well, thanks for having me, Jamie.
No worries. Thank you. Awesome. And we'll end it there.